Good afternoon. We will pay attention to analysis and interpretation today. We will spend time on creditors' average payment period to determine how long it takes the business to pay creditors after goods were purchased. It is important to determine if measures should be taken to pay the creditors in a shorter time so that the business can benefit from it financially. So sometimes you can receive discount if you pay in a shorter period, and that can increase the profits of the business. You are provided with the information of Alex Limited. So there's an extract from the nominal account section. We buy goods from creditors, so that means that we are interested in the purchases figure, and creditors are the people that we owe money to, so that means we are interested in the creditors figure, the money that we owe for purchases. Okay, to determine the creditor's average payment period, we must look at the average creditors, so it's the creditors at the end of the previous year plus the creditors at the end of the current year divided by 2, and we must determine the credit purchases. Okay, so if we look at the average creditors, they say that we must assume that the creditors was 640,000 in 2013. So we will take the total creditors at the end of 2013, and we will add the creditors at the end of 2014 divided by 2 to work out what is the average creditors. Then we want to determine what is our total purchases, and during 2014 the purchases was 4070, and they say 80% of the purchases were on credit, so we will work out 80%, and that will give me my total credit purchases. If I take my average creditors and I divide it by the total credit purchases times 365 days in the year, it means that we took 82 days to pay our creditors during 2014. Then we will do a similar calculation for 2015. So we will look at our creditors in 2015 is 705,000 plus the creditors at the end of the previous year, 819 divided by 2 gives us an average creditors of 662,000. I will look at my purchases during 2015, multiplied with 80% to determine what is my total purchases for the year. Then I take the average creditors divided by the total credit purchases for the year, and that will give me 75 days. You can also work it out in months. So instead of multiplying with 365 days, you multiply it with 12 months in the year, and then you see that it increased from 2.69 months in 2014 to 2.47 months in 2015. The company paid creditors in 2015 in 75 days, while they took 82 days in 2014 to pay the creditors. So the time that they pay creditors was shortened in 2015. The company should ensure that they don't take too long to settle their accounts, as they can be blacklisted. So it's very important to determine what is your credit terms so that you comply with those terms. Interest can be charged on overdue accounts, so it means the creditors can charge us with interest that will cause additional expenses and decrease the profit. Usually, an acceptable credit term is 60 days, depending on the supplier. Compare your figures with the firm's policy to determine if it's satisfactory or whether you are taking longer to pay than the term's policy, and compare it also with the industry norm to determine if it's satisfactory. If the payment period is not satisfactory, measures should be taken to improve this situation. So the following measures could be implemented. Reduce the amount of credit purchases so that you don't have to pay so many creditors in the future. Try and buy for cash and don't buy unnecessary inventory. Encourage debtors to settle their accounts by offering them discount if they pay within 30 days so that you can have the money available to pay your creditors. Try and increase your cash sales so that you have cash available immediately to pay creditors. And if not one of these measures help to increase the situation, you will have to sign an agreement with the creditors to extend the period that you pay them back. The creditor's average payment period indicates how long it takes the firm to pay the creditors. It is important to compare the debtor's collection period and the creditor's payments period, because if the creditors demand payment before we receive money from the debtors, you will experience cash flow problems because you will not receive the money in time from your debtors to pay the creditors, and that will have a very huge impact on the liquidity of the business. The firm should consider the possible benefit of paying creditors within a certain time so that they can obtain discount from the creditors that will increase the profits. The longer the delay in payment of creditors, the more cash will be available to cover your other expenses. So actually the creditor is financing you for the period that you owe the money to the creditor. So when you look at the creditor's payment period, you must make sure that you don't take too long and that you are blacklisted and they don't want you to buy from them on credit again in the future. On the other side, you must try and extend your payment period so that they are actually financing you and you can use the money in the meantime to pay your expenses until the debtors pay their accounts.